if MicroStrategy ever goes bankrupt, those convertible debt holders will be paid out first. They're at the top of the capital stack. I wouldn't be surprised in the next 5, 10, 15 years if the US government came in and took control of some of MicroStrategy. In a bull market, STRK and MSTR are probably going to rise the most. As long as Bitcoin doesn't go to zero, as long as Bitcoin continues to do what it's been doing over the last 10 years, Michael Saylor is going to have more and more and more and more options to him to raise capital to buy more Bitcoin. And since 2020, when MicroStrategy has begun this strategy, if you look at their share price returns, they've proven that they can outperform Bitcoin. The fundamental reason why they're able to outperform Bitcoin is because Alright guys, welcome to another episode of Money, Markets and Mayhem. Today we're going to be doing a deep dive on MicroStrategy and all the new preferred equities that they have been launching in order to raise capital and buy more Bitcoin. But before we get started, a couple of quick reminders. If you want to watch my 10K challenge where I try and take 10K and turn it into 100K, make sure you subscribe with the link in the comments. In the first 4 days, we basically went from 10K to 17K. We're up 70%. And in the last 4 trading days, we've given a lot of that back and we're down to about 12K. So guys, it's going to be entertaining. There's something like 750 of you that have subscribed to that challenge already. I'm blown away by the support, and more than being able to copy the trades, the real gift is in watching the moves, why the moves are being made, and the psychology behind the moves. Today, we just had a day where I basically cut a whole bunch of positions and almost went back to 100% cash. And seeing how we kind of trade around and deal with our human psyche, I think is the most entertaining thing of the challenge. But I'm still confident. We're up about 20% or something like that, and I'm still confident that I can 10x that 10K. There's an exciting Fed meeting, FOMC meeting tomorrow. When you're watching this, it'll already have happened, so the market's probably going to move heaps by then. So in order to follow the MicroStrategy story, I've been following a lot of people on X. I've been listening to podcasts, I've been listening to interviews, I've been listening to X Spaces, and I'm trying to understand from these experts' point of view the impact of what Michael Saylor is doing and what the financial engineering that he is undergoing is going to mean for Bitcoin and for MicroStrategy stock and for these preferred equities. And what I've basically done in the last day, so I spent most of yesterday reading and researching into these preferred equities and into MicroStrategy using ChatGPT deep research mode and using Grok heavy mode. And what I've come up with is a little bit of a cheat sheet for beginners. So for people who haven't really looked into MicroStrategy and these preferreds and don't really understand what they mean, I've put this cheat sheet together, and if you comment cheat sheet in the comments and then subscribe to my 10K challenge, I'll make sure that the whole database gets this MicroStrategy cheat sheet during the week. But what I thought I would do is I put together this cheat sheet and I'd run through this cheat sheet that the AIs helped prepare for me, and I also had them fact checked. And off the top, one thing that I've noticed is that ChatGPT is really, really good for deep thought, right? So expanding on ideas, whereas Grok heavy and Grok is a little bit more, it seems like Elon Musk is thinking about physics and reality when it basically gives responses without the fluff. And I found that it's definitely more usable to get accuracy, especially when you're looking at numbers, statistics, and actuals of, live actual stock prices or percentages or MNAVs and things like that. Grok seems to be a little bit better at being accurate. Like, for example, I just put this cheat sheet that I'm about to show you through Grok and asked it to fact check it. And it basically came back and said the accuracy was about 95%. There was some mistakes it made, and then it went and corrected those mistakes. So that these AIs are not yet infallible. They make mistakes, so they can't be relied upon exactly, but they're pretty good in helping you to understand things a little bit better and getting you, 90% of the way there. Okay, so without further ado, what is MicroStrategy? So MicroStrategy rebranded to Strategy in 2025. They started out as a software firm, and they were basically a very minor competitor to Microsoft, but now they solely focus on acquiring Bitcoin. So they're a Bitcoin Treasury company. As of July 29th, they hold 628,791 Bitcoin, and that is valued at $74 billion at a price of 118,000 Bitcoin. Now, their core strategy is to raise capital via equities and debt and to buy and hold Bitcoin indefinitely. They recently released a 21-21 plan. So basically told the market, we want to raise 21 billion in equity and we want to raise 21 billion in fixed income by 2027 so that they can lever up their balance sheet and buy Bitcoin. At the moment, they currently have 8.2 billion. They have 8.2 billion in convertible debt. All right, so that's at the top of the equity structure. So what that basically means is those people who took out that convertible debt, if MicroStrategy ever goes bankrupt, those convertible debt holders will be paid out first. They're at the top of the capital stack. And that's important to note, right? And I'll run through that in a little bit more detail. So basically what you have is MicroStrategy has raised debt. The first strategy that they had to raise debt was this convertible equity debt. So over time, and that debt matures anywhere from 2026 to 2029, but over time that debt can be converted into equity, and it trades, but it doesn't trade on the stock exchanges. It trades kind of, you could say kind of private, right? It's held by institutions. And then what MicroStrategy realized by doing that is that the companies that buy that debt, they are not taking a directional bet. They're simply in the market to trade the arbitrage or trade the volatility on that debt. So every time they take out that tranche of debt, they would then go short the MicroStrategy common stock, right? And what that did was create a little bit of a drag on MicroStrategy's share price. So Michael Saylor has even come out in interviews lately and said that he doesn't recommend Bitcoin Treasuries raise convertible debt. He recommends that they go straight to the preferred equity, which is what you're seeing with STRK, STRF, STRD, and STRC. And I'll break down exactly the differences between those preferred equities in a moment. Now, it's important to understand that technically isn't debt, they're equities, okay? So the convertible debt gets paid first, and then based on the covenants of those preferred equities, if there was a liquidation or bankruptcy in strategy, then STRF holders would get paid out. Then if there was anything left, the STRC holders would get paid out. After that would be the STRK holders. Then it'd be the STRD holders. And then if there was anything left, the MicroStrategy common shareholders would get paid out. Now, if the worst case scenario was to happen and Bitcoin was to crash or go to zero, it's very unlikely that many of those holders in the capital structure are getting anything. But that's the order of hierarchy anyway. So it's worth noting. The total debt that MicroStrategy currently holds, so they have $74 billion worth of Bitcoin, and their senior debt, convertible debt, is $8.2 billion, And then they have about 4 to 6 billion. I haven't confirmed the exact number because this is moving each week, but it's about 4 to 6 billion in preferred equity debt, right? So that's money that they owe in perpetuity. And so when people buy STRK, STRF, STRC, and STRD, right? That is like us loaning money to MicroStrategy, and then MicroStrategy is paying us interest on that loaned money. That loan money, because it's perpetual in nature, it doesn't have to ever be paid back, right? We can sell it, we can trade it, and other people can buy it, but it doesn't have to ever be paid back. So MicroStrategy is basically taking on debt that never has to be paid back, but what does need to be paid back is the coupon. So the interest rates that he's providing for those equities. And that's where the risk is, right? If there's ever a situation where MicroStrategy takes out so much debt that they can't pay back the interest rate, that's when things would start to get a little bit shaky. But we'll go into that a little bit later. So the common stock of MSTR, so there was an amendment here. So the common stock of MSTR trades at about 1.5 to 1.7 times their Bitcoin holdings. So a lot of people say, well, why would I buy MSTR when I can buy Bitcoin? So I can buy $1 of Bitcoin for $1. Why would I buy $1 of Bitcoin for $1.75 or $1.55 now? And the short answer to that is that if you are going to do that, you're hoping that MicroStrategy can acquire Bitcoin faster than what you can. And some people say, well, that's just silly. But over time, and since 2020, when MicroStrategy has begun this strategy, they've proven, if you look at their share price returns of, 3,000%, they've proven that they can outperform Bitcoin. And the fundamental reason why they're able to outperform Bitcoin is because they are able to create all these capital raising mechanisms, right? They've raised $14 billion worth of debt. As an individual punter, there's no way that we can raise $14 billion worth of debt, right? Considering when MicroStrategy started this strategy, they were only $1 billion company. It's crazy to think that they've raised 14 times what their initial market cap was when they started the strategy, right? And so that is the reason that you may choose to pay a premium to own MicroStrategy or Metaplanet or Saylor Scientific or whatever the treasury company is. So you're betting on management's ability to raise capital effectively, not over leverage, they go bust, and to continue to buy Bitcoin. Let's go through the preferred equity. So the first preferred equity that Saylor launched was STRK, right? So the ticker is STRK and it's called Strike. And basically what they offer on Strike is if you buy one share of Strike, there's an 8% fixed cumulative dividend, right? So for every share you own, and just important to keep in mind. So with all these preferred equities, when they're priced at $100, right? If it's priced at $100, that is what's considered par, right? But these equities were actually released to the market at discounts. I think Strike was released to the market at a price of $80, right? So if you own one share worth $100, you will get, actually, it doesn't even matter, right? The coupon varies based on the price of the equity. So let me explain that. Every share of Strike pays an $8 annual coupon. So if you look at the price of Strike now, the price of Strike now is around about $104. So if you buy it at $104, your effective yield is lower, is at 7.7%, is lower than what if someone who had bought it at $80. If you bought it at $80, your yield would be above the $8 because you're buying it cheaper. And as the share increases in value, you get that capital appreciation, right? And but it's important to understand that For every share, there's a fixed $8 coupon per share where you buy your shares at. So based on what price. So if strike comes down to $80, you're basically getting it at a discount, right? Yeah. So if you buy strike at $80, the effective yield is 10%. So the lower the price of these preferreds go, the more potential upside, because it's like a property, right? If the rental return goes up, and it continues to rise, that'll create a floor for the property, because that's what happens as property prices come down, the rental yields go up, and that usually creates a floor for property prices where investors will step in and buy the property because they're like, for that rental yield, I'd be stupid not to, right? So these, the yields are determined at a par or a fixed price of $100, but they can trade under and over, okay? STRK is a convertible preferred. And so what that basically means is it pays its $8 coupon per share, but it is also, if MSTR gets to $1,000 per share, the strike is convertible to MSTR shares at 10-1, which basically means for every 10 shares of STRK, you could get 1 share of MSTR. And people will say, well, why would I want to do that? Well, effectively, if you're bullish on Bitcoin and you're bullish on the price of MSTR, you could own strike and get paid $8 per share while you wait for Bitcoin to rise and for MSTR to rise, and then you could own MSTR at $1,000, right? And all that time, you will have been getting paid a yield to own the shares at $1,000, right? So you basically have yield and you have upside convertibility. So the most not the most risky, but the most potential upside in these vehicles would have to be STRK because it has that convertible kicker. The next preferred equity that MSTR launched was STRF. And that had a 10% fixed cumulative with a ratchet penalty of 18%. So basically what that means is that for every share of STRF that you own, you get a $10 coupon. And if the coupon is ever missed, then there is a penalty that can ratchet up to 18%. So eventually those coupons will always have to get paid. Now, the price of STRF when it was released at like $80 or $90. That is now trading at $113. So if you bought 1 share at 80, you've had the uplift or the capital appreciation to $113. But you're still getting your $10 per share coupon. But if you buy STRF now at $113, your effective yield is 8.9%, right? Because you're paying the extra $13 for the stock. So it's important to understand that as the price of these preferred equities go up, the yield comes down. And as the price of them comes down, the effective yield goes up because it's a fixed yield per share. STRD, Stride, was the next one that was launched. That also pays $10 per share. But the kicker on STRD is it is non-cumulative. Oh, one more thing on STRF. That is at the top of it is at the top of the capital stack with relation to these preferreds. So MSTR wants this to be the best, the least risky. And that basically means that if MSTR would have ever had to liquidate, that STRF holders would get paid out first. So it has the best covenants for the people lending money or buying STRF. STRD, on the other hand, has no covenants. They can stop the yield whenever they want. It only trades at $85. So it was launched at 80, went up to 95, and now trades at 85. It's effectively offering an 11.8% yield. All right, so higher than what it was than $10 per share because of that discount to par. And it's effectively a junk bond. So MSTR can, if they run into trouble, they can stop paying the yield on STRD at any time, right? So that's important to know. If they're in trouble, they would be able to just sell that at crazy discounts to raise capital to pay yield. And so you might, in a bear market, worst case scenario, you might see that trade down at $50 or which is 50 cents on the dollar, right? But at that point, the yield will effectively go to 15%, right? So that's when you've got the yield. If you don't think MSTR is going to go bankrupt and you're seeing a potential 15% yield, right? You might step in, or investors might step in and buy STRD. I did have a little bit of STRD in my mum's account. I've decided to cut it because STRD is the most risky, and with Saylor continuing to launch these different preferreds, I don't think I'd want to own STRD here. But in the event of a bear market, and in the event that it trades at 30, 40, 50 cents on the dollar, I might step in and buy some of that for the high yield, right? It's junk bond, it's high yield. And if you don't think the company's going bankrupt, you might as well take the yield in preparation for the uplift, because when the market bounces back, when Bitcoin bounces back, so that you'd probably want to look at that at the end of a bear market, right? Potentially. Now, the most recent offering is STRC, stretch. And this is a variable, so the interest rate can change on this. So all the interest rates on the others are fixed per share, but on this one, it can change and it can adjust monthly. So what MSTR is trying to do with this is, rather than having his preferred equities trade at 80, 90, 120, 130, he wants STRC to trade at 100 at all times. And what he will do in order to make that happen is, if it's trading higher, he will lower the interest rate. If it's trading lower, he will raise the interest rate. So they will dynamically change the interest rate to try and keep it trading at 100. And this is interesting because he's trying to keep it stable. So he's trying to make it like cash in the bank, or like he's trying to make it like short-term treasury bills or like a stable coin. And he's paying a yield that is above the risk-free rate. So if you were to lend money to the US government, you get about a 4 or 5% yield, and he's offering a 9 to 10% yield, right? He IPO'd it at $90, so it was a 10% discount. And he got 2.5 billion. He raised 2.5 billion. That was more money than was raised for the Bitcoin ETFs at IPO, and it's like 5 times more money than he's raised for any of his other preferred equities, right? So there's a contingent in the market that wants that safe yield. Also, it's paid monthly, right? That STRC is paid monthly, whereas the other preferreds are paid quarterly. The dividends are paid quarterly. All right, so that, in my opinion, that was a no-brainer to try and get some of that at IPO if you've got capacity, because it's coming in at a 10% discount and it's offering a 10% yield, all right? And we're in a bull market, so that was really cool. Just on each of these preferred equities for a minute, they don't necessarily correlate to interest rates, but in an environment where interest rates are dropping, the preferreds that would do best would be STRF and STRD, right? STRK would also do okay because the other preferreds are doing well, and rising ships, the rising tide lifts all boats. But it's in a rising interest rate environment that STRC would do well. Because as the interest rate on US Treasuries are rising from 5, 6, 7, 8, 9, 10%, then the interest rate, because it's variable on STRC, would rise in conjunction with that. So one of the criticisms has been with all the instruments that Saylor's been creating is, if interest rates rise, then these instruments won't do well. Now he's created the STRC, which is it's kind of crazy because it's kind of like an inflation hedge, right? As interest rates rise, the yield on that would rise, right? And so what he's doing here is really incredible. And that's something that I recommend that you guys really try and dig deeper into after this podcast. What if this interests you? I would try and take the cheat sheet. So remember, if you comment cheat sheet and you subscribe to the 10K challenge, I will send the cheat sheet out to my whole mailing list next week. But what I want to encourage you to do, because I know I'm not the best teacher, I'm not the best explainer, is I want to encourage you, if this interests you, to start digging deeper into some of these concepts and things that I'm bringing up today in the pod. Yeah, so we spoke about in a bear market scenario, BTC falls, the MSTR common stock would get hit hardest, STRD would probably get hit next hardest, then STRK, and then there's the potential for STRF and STRC to actually increase in value in a Bitcoin bear market, because they're the two that would have claim to the Bitcoin first, right? So we don't know exactly how STRF and STRC would go in a bear market, but there is the potential that they would rise in price and yields drop. You know, a really bad bear market, everything in the stack is going to get hit. We spoke about rising rates favoring STRC, falling rates favoring the others. So recently STRK, which is one of my biggest positions, dropped from $125 to $104 post the STRC IPO. And I think one of the reasons for that is because a lot of the money in STRK rotated into STRC for a higher yield and more potential upside, right? So one of the things that I'm going to start doing a little bit more now that I'm understanding how these preferreds work is I'm going to trade between them, right? There's going to be times where I want to be all in STRC. There's going to be times I want to be in STRK. There's going to be times I want to be in STRF, right? And so there's at different, if you understand interest rates, then it makes sense to be in a different version of these at different times. Because what Saylor is trying to do is to create a Bitcoin yield curve, right? All right, I've got this chart that basically goes through each of the instruments. It explains the dividend yield. It shows you what the dividend yield is today based on the current price, right? So you can see how this is what it is per share. This is what it is effective as a yield curve. This is the new one. And then there's this chart as well that's in the cheat sheet. And it basically just shows the difference between all these instruments. Yeah, just a quick one I'll touch on, right? So MSTR year to date is up 35 to 39%. Bitcoin year to date is up 26 to 28%, right? There's other Bitcoin treasury companies that are trying to do the same thing as strategy. I think the next best based on interest at the moment, I think would be Metaplanet. And Metaplanet is actually up 430% year to date. And they hold 17,132 Bitcoin. Saylor just bought 21,000 Bitcoin in the last couple of days from the IPO of STRC. Metaplanet, whose share price is up 430%, would have been a better investment than MSTR if you bought it at the start of the year. Why is that happening? Well, basically, the smaller the company is, the bigger their ability to grow their Bitcoin per share on a percentage basis, right? So they've gone from basically 1,000 Bitcoin to 17,000 Bitcoin in a short amount of time. And on a percentage basis, even though MicroStrategy can buy that whole stack of Bitcoin in a day, on a percentage basis, market cap basis, it's not as quick, right? So just a quick note on Metaplanet. Metaplanet is in the Japanese market. Metaplanet, if they start to do this preferred equity strategy, would actually be able to raise this capital at a cheaper interest rate than all the interest rates I've just discussed with MicroStrategy. And the reason for that is because their interest rates in Japan are lower than the interest rates in the US. So effectively, Metaplanet might be able to raise money at a cheaper rate in a country that is starved of yield because they haven't had high interest rates for a long time. And so they might be able to raise capital at a better rate. Now, here's the catch. And Saylor recently spoke about this in a podcast with Joe Burnett, and I might just quickly throw it up. He basically said, I'm not going to go through the exact numbers, but he gave the numbers. He said, for every $1 billion worth of Bitcoin, you will be able to raise preferred equity debt of, say, X amount, whatever it was, 10% or whatever it was. So the issue that Metaplanet and all these other companies have at the moment is they need to grow their Bitcoin stack as quickly as possible so that their equity, so their Bitcoin equity is high enough to be able to then go out there and raise debt, right? You can't have $1 billion worth of Bitcoin and raise $1 billion worth of debt, or you're going to be a very risky proposition, because if Bitcoin falls, you're going to be in negative. Saylor has 76 billion in Bitcoin, and he's only got 14 million in debt, right? And so based on what Saylor is doing, the argument is that you can only, if you want to keep your balance sheet strong and you don't want to over leverage, that you can only really raise debt for about 7 to 15 to 20% of your Bitcoin equity value, right? Otherwise, you're not protected in the event of a big Bitcoin 70-80% drawdown. Okay, and so that's important to understand as well. And I won't go into the details or the numbers around that, but if you watch Michael Saylor's earnings calls and you look at their presentations, they talk a lot about Bitcoin and Bitcoin being able to survive a drawdown and how much overcapitalized each of the offerings are based on Bitcoin. Okay, so that's important to understand as well. Yeah, so in a bull market, STRK and MSTR are probably going to rise the most. They've got the conversion and the upside, then the yield compression. In a bear market, the common stock will get hit the hardest. STRD will then struggle, and STRF and STRC will still get hurt, but they will probably recover quickest. So this will be interesting, right? Next bear market, when Bitcoin is crashing and MSTR is crashing, if you start to see STRF and STRC recover, that's probably a sign that investors are starting to step back in and take some risk. And they'll probably be a leading indicator to the Bitcoin bear market becoming closer to an end. Some of the big opportunities that are potentially coming up, obviously, the more that Bitcoin goes up, the more ability Saylor has to issue debt and to sell his stock and to buy more Bitcoin. So it's like a reflexive loop, but that loop could also spin back the other way in a bear market. You will notice that the MNAV of MicroStrategy is coming down, and there's a lot of traders and market gurus out there that are basically saying, Saylor, slow down, stop raising debt, stop hurting the MSTR share price, stop buying Bitcoin, just let it run. And my opinion is that Saylor 100% understands that there's going to be another bear market, and he's doing everything he can to raise as much capital as he can at the moment and bring his MNAV down and buy Bitcoin, because that is going to protect, the lower his MNAV can come before the bear market, the more that it is going to protect the common equity price, and the more that it is going to protect the whole stack. If he goes into a bear market and MSTR is trading at 3 or 4 times its Bitcoin, there's so much more risk. So I genuinely believe that Saylor is he's intentionally trying to keep the stock price down versus the price of Bitcoin at the moment, because I think in a bear market that'll protect him, and there'll be less capital destruction that will occur. S&P 500 inclusion. So MSTR is about to announce a $14 billion profit for the last quarter for a company worth $100 billion. And how many companies have announced that much profit as a percentage of their market cap? That's wild. And so he's now qualified for MicroStrategy is now qualified for S&P inclusion. So I'm not sure that the S&P is going to include them, but in September we're going to find out. And if the S&P does include them in the S&P 500, all the passive investing strategies that currently have to buy the S&P are going to have to buy MSTR. And that is just going to continue to help the MicroStrategy flywheel. So, that is going to be a big one when that happens. Biggest risks, obviously the biggest risks are a bear market. Bitcoin drops below 70K. At the moment, I think the average purchase price of all the current Bitcoin is about 74K. So that is going to be a problem. The other potential risks are having the more debt that they raise, having to continue to pay the yield. Where is the money to pay the yield going to come from in a bear market? It means that they're going to basically have to sell more stock, sell more equity, and dilute the stack even more. And so, in a bear market, I think there is a possibility that we trade at a discount to MNAV. It's possible. Me personally, I'll be waiting with bated breath, but that's when I would be looking to add to MSTR when it basically is trading at a discount to NAV. For now, why would I buy MSTR? Makes no sense for me to buy MSTR when I think Saylor is trying to bring down that MNAV. It makes, Bitcoin's going to outperform it. Other things are going to outperform. So my biggest position, or the biggest position I've been adding over the last couple of months has been Metaplanet, because I think Metaplanet is much earlier in the journey of what MSTR has done. And if it plays out like MSTR does, then Metaplanet is one of the ones. It'd be interesting to see how far they get between now and the end of this bull market. It might really be the next bull market where you see Metaplanet really do phenomenal things. But anyway, that's the position that so I've got my Bitcoin stack, and then I've got Metaplanet is basically my play on Bitcoin. A little bit more risky, but if they can emulate the Saylor playbook, they're going to do very well, having a monopoly in Japan. Regulatory crackdowns, if there's any new laws on Bitcoin treasury holdings, etc., all those things can be a risk. Execution failure, mismanagement, etc. Potential new developments for MicroStrategy. So, obviously the earnings release that we spoke about, the continued capital flows into these preferred equities are all going to be big, important things. But they might also start coming out with some more preferred equities, right? Like they may start coming out with a version of STRK, a convertible, but at lower interest rate. Instead of $8 per share, maybe they come out with a version at $4 to $5 or $6 per share. And if we get lower interest rates, then there's still going to be a demand for that in the market. And then they might have bonuses, like they might have different tier bonuses for if Bitcoin hits a certain price, the conversion hits a certain rate. But I'm going to give you all that. So rather than me try and explain it, and the disclaimer is all of these speculations on what might come next, what preferred MicroStrategy might come next, they are all AI generated. Now, you might say, why would I want to read that? Well, Saylor himself has confessed using ChatGPT deep research to innovate and to create these preferred equities that have never been done before, right? So he's using these tools in order to create these products. And so I think reading what ChatGPT and Grok Heavy say about what might come next is really worth the read, all right? None of this is financial advice. It's just interesting stuff that I think is worth reading. And then when this stuff starts to happen, you have more of an understanding of it because you've basically been reading through the scenarios. Yeah, so like it talks about STRV, STRN, STRM. So there's all these different options that Saylor has. So, I mean, what's the main point? The main point is that as long as Bitcoin doesn't go to zero, as long as Bitcoin continues to do what it's been doing over the last 10 years and grind higher, Michael Saylor is going to have more and more and more options available to him. He owns 3% of the Bitcoin. So as if it keeps rising in price, Michael Saylor is going to have more and more and more and more options to him to raise capital to buy more Bitcoin. It's really crazy and blows your mind to think about it. I personally believe that he could be a little bit of a Trojan horse for the US government. I wouldn't be surprised in the next 5, 10, 15 years if the US government came in and took control of some of MicroStrategy. It's interesting if you go back and look at Michael Saylor's story. He was an Air Force brat. His dad was a Navy fighter pilot in the military, in the Air Force. So the guy has connections. The guy is a perfect candidate for this kind of Trojan horse. If you listen to Larry Lepard from The Big Print, he also says that he thinks that Michael Saylor has ambitions to be the president of the United States. So if Michael Saylor becomes president of the United States, is it even a question then of whether the government will be able to take control of some of MSTR? And people will say, oh, but in America, property rights are important. We honor property rights. Well, if you go back and look at World War II, there were many companies that were taken over by the government during World War II, during wartime. So it's not a given, right? It's not a given. There's always risks inherent with these things. But usually you'll be able to see the writing on the wall if you have your eggs in that basket and you're studying it. So anyway, guys, that's it. I hope this wasn't gibberish. I do my best to try and explain the things that I'm learning. Like I said, I spent all day yesterday trying to understand these better. And the reason that I spent so much time on this yesterday was because I basically have 20% of my portfolio in STRK. And I was loving life when it went from $93, which is what I bought it at, below par, to $127. I'm like, oh, this is awesome. I'm getting $8 a share and I'm getting capital appreciation. And I didn't sell any at that point because I didn't really understand that I should. I didn't really understand the ramifications of STRC coming out. And I saw my STRK go from $127 down to $105. And I'm like, well, shit, should I be selling? What are the long-term implications? So when you have skin in the game, it is really important to understand the second and third order effects of all these changes and things that are happening. For any other STRK holders out there, because I'm still bullish Bitcoin, I'm not going to be selling. I think STRF and STRK will start to get a bid again now that the STRC IPO is done, because remember, once STRC trades at 100, it offers the 10% yield, but it doesn't really offer that much capital appreciation unless interest rates rise. So STRF and STRK, I think they offer more capital appreciation. STRK offers probably the most because it's got that convertible 10-to-1 on MSTR. But STRF, in my opinion, is the safest, and it'll do very well, I think. And that's in my mum's portfolio. That in her superannuation, STRF is currently her largest position because of the yield and because I think it's at the top of the capital stack, and because I think I'm bullish on Bitcoin. I don't think Bitcoin's going to zero. So yeah, that's it, guys. I know that there was some. I've been wanting to do a talk on MSTR for a while. There's some amazing speakers out there and teachers out there that can explain this stuff. And I would suggest that everybody goes out and follows Jeff Walton on X. And I would suggest that everyone goes out and follows Jeff Park on X, and follow True North, who also release a weekly podcast. And they're always talking about this, and they will probably going to do a much better job than what I am at explaining it. But I think the main point is you guys have got to, if you're going to invest in these things, you've got to get yourself to a level of knowledge where you understand the ramifications and know when to sell a little bit, when to buy a little bit, and when the probabilities are most on your side to make money, right? As you've seen with the recent performance of STRK. Anyway, guys, if you found it useful, like, subscribe, and if you're finding anything that I'm doing useful, the best way that you can support me is by leaving a comment or sending the podcast to a friend and asking them to follow along as well. Thanks, guys, and I'll see you next week.